Rough day for the market, you'll have to say that. And while you could have ignored Friday as a one-off, today's market move is clearly telling you that the near-term texture of the market has well and truly changed. And the Nifty now down about 1.2%, the Bank Nifty down about 400 points, advanced decline at 1:4. You can't really sweeten this data. That's a fact. So if you're a bull, late bull, you are in trouble. This is Closing Bell. I'm Anuj, and with me is Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. I totally take your point. I mean, I think one or two things stood out for me. One is that we've consistently been at these levels. There's been no trace of buying so far. And, like, no one's kind of come in to sort of, keep the flag flying high today. Whether it's banks, all of them down, stocks like Reliance, the IT names, basically nothing has performed. So, what is sort of the takeaway from here, given what you just said?
We're still up 5% for the month. So the amount of rally that we've had, this is year end, March end. DIs, have a bit of a cash crunch, as they call it. This market was always vulnerable if there was going to be a slowdown of this FII flows, which was largely ETF driven. So we've had a big swing from 10,500. Remember, we were talking about 11,500, that above 11,100, there was no resistance at 11,500. This market practically went there, has completed that swing. It's only fair if it gives back, say, about 1/3 of that and goes to, say, 11,200, 11,150. What that would also do is it will allow the moving averages to also catch up. The 20-day moving average is at 11,100. It just can't go on forever. And today the market gave you indications that as soon as the first R low was broken, that perhaps it wants to correct. And last hour could be fairly interesting because this is expiry week and there would be an attempt to at least defend 11,300. But I have no doubt in my mind, looking at the price action and looking at the volume action over the last 2 days, that that swing is over, and now this market perhaps would go back, retreat a bit to 11,100 before a fresh swing starts. Overall, it's still a market which is in a large uptrend, and that uptrend doesn't get violated till the Nifty is above, say, 11,100, 150. Till then, it's largely an uptrend, but this is perhaps the market's way of flushing out some weak longs or whatever. That's what the market is doing right now.
Okay, fair enough. We should just also pull up global markets to keep the context intact. Obviously, Asia was reacting to Friday, so you had very deep losses in Asia. That's not a surprise. Europe, for what it's worth, because the reaction anyway happened before the weekend set in. So right now, markets are down, not completely out. And futures on the Dow or the S&P 500 also lower. But again, off the lowest level, about a 75 point drop on Dow futures for the time being. About a 10-point drop on the S&P 500 futures. That's how it's playing out. So let's just see what the global picture tells us. But right now, it is time to get started. Here's what's lined up on Closing Bell today. It has been a sea of red, with major indices down over 1% on the back of fears of a global recession. Weakness in Reliance, HDFC and ICICI Bank drag the Nifty lower. IOC, Power Grid and ONGC are some of the stocks moving on the upside. We'll be discussing all of these trends with the fundamental experts, SP Tulsian of sptulsian.com, independent market expert Amrish Baliga, and Mayuresh Joshi of Angel Broking. Now, with the market continuing to slip further away from the 11,500 mark that we saw last week, where should investors look for cover? What are the triggers for the next breakout? And what should your strategy be with respect to your portfolio? We asked the Alpha Manager of the day, Nilesh Shetty, Associate Fund Manager at Quantum AMC, joins in. And of course, along with the fundamental calls, lots of trading ideas coming your way as well with Ashwini Gujral and Mitesh Thakkar.
Okay, as we speak, just a little bit of pullback, especially on the Bank Nifty, just a little bit. Last time that was sold into, let's see what happens from here on. We have Ashwini and Mitesh with us for last hour calls. Good afternoon. Ashwini, you're reading off the screen, and what would be your top trades now?
Basically, the momentum is visible across sectors. So it's not like banks are going up and IT is going down, etc. This sort of movement has legs and often shows follow through. So I would still not think that you are too late in terms of getting short, at least on financials, because the financials could have helped out the market on a day like this. That they are not, and if they're sitting on a 2,500 point rally, that makes things a little bit precarious. So my sense would be that even now you can easily get short on the market. You're sitting on a 1,000-point Nifty rally, 2,500-point Bank Nifty rally. It'll be difficult to reverse this kind of momentum in a hurry. Plus, you have global cues and macros which are turning a bit sour. So my sense is that we should now assume that the larger averages will probably come into play. Having said that, Sun TV is a sell with a stop of 581, target of 560. Cholamandalam is a buy with a stop of 1330, target of 1365. And DLF is a sell with a stop of 194, target of 182.
Okay, so plenty of sell calls also making it to Ashwini's list today. Mitesh Thakkar is with us as well. Mitesh, how would you look at the last 1 hour, considering how weak the day has been? Would you look at fresh shots now?
So I think we were looking to buy into this decline around 11,350. We've taken minor positions and kept the stock around about 11,315. But otherwise, not aggressively buying over here as yet. The idea remains that basically this is a market which is uptrending. So let's see where the intraday supports kind of hold out, and if the market can bounce back from those levels. So that being done, I have on stock side we've taken some short positions. Biocon is a sell for a stop at 618 for targets of 590, and Siemens is a buy at stop at 1024 for targets of 1090.
Okay, ICICI Bank has been the problem point for the market today. In fact, it's a decent reversal after hitting 400 that day. Now 383 on the stock. So some bit of profit taking. SP Tulsian of sptulsian.com and Amrish Baliga in our studios. Good afternoon. Mr. Tulsian, this how important is this year ending going to be as a factor in this market? I mean, I know you had made this point last week about getting a bit cautious till expiry, but we have another 3 days to go for expiry, and after that 1 more day before the financial year ends.
See, Anuj, let me just give you some kind of analysis. If the market would have remained bullish, probably would have said that to prop up the NAV of the 31st March, we are seeing this momentum. But those things doesn't happen nowadays because you don't have any kind of incentive to go for either propping up the share price or making it down. In fact, I have been cautioning this for the last whole week, and if you see the behavior in the last week, there was no change in the Nifty and Bank Nifty. It practically started on Monday at whatever level, it closed at the same level on Friday. In fact, and I have been cautioning that we can see the swift correction scene coming in, because maybe if I take the view till this morning, when the market, prior to the market open today, Bank Nifty was up by about 2,600 points in this series, and Nifty was up by 575 points, which was unwarranted. And the kind of run-up which we have been seeing in the banking stocks, as seen from the Bank Nifty rise of 2,600, this kind of fear was seen coming in. Now, rightly so, we have seen the correction of about 300 points on Friday on Sensex, 450 points today. Maybe this correction will last till this morning. I have also said in the morning also, I'm fearing this correction to continue up to Wednesday. The whole poison will get out of the system on Wednesday and probably from Thursday, because generally the expiry management happens 1 day prior. This is what I have been again saying this for the last maybe couple of months, that every weekly option expiry doesn't happen, management doesn't happen on Thursday, it happens on Wednesday. So I won't be surprised, probably I will be a brave buyer on Thursday, and on probably again on Thursday, Friday, when the markets will start moving up, then probably we all will say that 31st March management is happening. But these things are immaterial nowadays, because every day you have your NAV calculated, and there is no incentive, there is no wealth tax, there is no what you call any kind of billionaire list being prepared for the industrialists to come out on that list and all that things. So yes, it was probably the sharp pull-up which we have seen, which was unwarranted in this series, as I said, of 600 points and 2,600 points on Nifty and Bank Nifty. So the correction was desired, which will come and in fact, even the indices were seen to be very much in overbought position, as seen from the premium. Even today, when the Bank Nifty opened, the Bank Nifty had a premium of 56 points, Nifty had a premium of about 15-16 points. 1 day prior to that, it was almost double. Bank Nifty had a premium of 100 plus. So those things, those data points were suggesting that the retail traders were seen to be hugely in long position, and the smart hands, those who have bought earlier are seen now going for the profit booking, which probably may last till day after tomorrow.
Okay, so let's see how the next couple of days play out. Mr. Tulsian saying maybe by the end of this week, once we are in the new year and the technical factors are out, then maybe we can see some buying come back. However, one stock that's not seeing much buying today or the last couple of days is actually Z Entertainment. Pull up the chart, 3.5% down on Z. Anuj, I remember you were pointing this out in the morning, and then, now, I don't know if it's related, but we were having a discussion with a lot of the mutual fund managers. What's happened on Friday rather, is that SEBI came out with a circular detailing some very stringent rules with respect to how you start marking debt securities in case they become non-investment grade. The chat or the buzz is, whether SEBI goes a step forward and also takes into consideration a situation like Z, when lenders decided not to sell shares. That's something that's still behind closed doors is being discussed. So I don't know if that's triggered something. People saying we've made great money on this rebound rally, so take some of it off. But it's interesting, from about 480 thereof, 480, it's come off.
It's come off. The price pattern is very intriguing. And I don't want to say much here, Surabhi, because I honestly don't understand what's happening here, frankly. And I think not too many know. And we know is that almost everyone has reported that a deal is going to happen, and at aggressive prices. But if that was the case, the price should not have been what it is. The price should easily have been 550 plus right now. And again, I go back to the original chat about Z Entertainment, and it's a company where so much promoter equity is pledged. No doubt, it's a great asset, but this is not a market in which this is a buyer's market.
Sure.
A buyer would want his price.
Sure.
So to expect all of a sudden 600 plus on Z, I think would be too much. It became oversold at 300. Perhaps it got overbought at 480, 490. Let's just leave it there, and then of course we'll find out what happens with Z Entertainment.
Oh, absolutely. Mr. Tulsian, if I could toss this to you, I know you've had a positive view and you've been talking about the stake sale as well. But is there any sense in caution as of now? I don't know to what extent the SEBI ruling of Friday has a bearing, or if it is just some fear psychosis right now. What if SEBI comes and says that tomorrow, lenders can't hold shares like Z, and this moratorium that is there, that perhaps it's not valid. But anyway, your thoughts on what should be done now that we're seeing profit taking back on the stock?
See, Surabhi, it is difficult to comment on the SEBI guidelines in respect to the mark-to-market for the debt instruments, having against the security as the listed stock. But if any kind of moratorium is given, and if you see the contract having entered into by the Z management with all the lenders that no invocation will happen till 1st of September, then I don't think that you have any reason to worry. That's number one. Number two, coming on the stake sale, the timeline as given by the management was somewhere in the end of April. So if you are keeping the daily view on the stock as an F&O traders, you have all the reasons to worry and must exit from the stock. But if you are an investor, I still keep a positive view. In fact, I don't see any reason for the deal happening above 525, 540, because that has been the street expectation. That is the level I have been taking a call on. So that can make the stocks to move up again back to 475, 490 level. It is a wishful thinking to expect a price of 550 or 600 on the stock. That was never expected and anticipated. So taking the stake sale as the alive this one, and I don't think that there is any other alternative for the management to, though the street is again buzz with the rumor that even SL Propec is up for sale. But even there, I've said that probably that is a separate earmark company of the Ashok Goel within the family, in which no pledge has been created on any of the shareholding. Promoter shareholding. So I am not confusing that with this stake sale. So stake sale of Z Entertainment is seen to be very much in place, and I am expecting that to happen by end of April. So if you are an investor, there is no reason to worry. These technical factors can make the stock to fall to the 400 levels also, but beyond that, below that, I am not expecting it to happen. And as an investor, keeping the confidence of the stake sale alive, and again with a target of 475 to 490, which can be seen in the month of April itself.
Okay, Amrish Balika is also with us. Amrish, good afternoon.
Good afternoon.
Your thoughts on a couple of these oil stocks, ONGC, IOC, they've done well of late, especially
Absolutely,
the oil marketing companies.
Yeah.
Your thoughts on what could be driving this rally?
No, in fact, we have seen this rally for possibly about last, I think, 4 to 5 months. And in fact, I had given a buy call on the OMCs when I think HPCL was close to about 100 rupees lower than where it is right now. But then I think more or less this rally is done for the time being. I really don't expect the oil prices to correct much from here. In fact, they should be strengthening or consolidating. At the same time, we have also seen the rupee also gaining. But again, do we expect rupee at 65, 66? I don't think so. I think it will be in this range of plus minus rupee and a half. So on both these fronts, I really don't see too much of a gain happening for the OMCs. So I think with this sort of a move, what we have seen in the last 4-5 months, I think that's more or less done. Don't really expect it to move from here. So if you're bought in the last 4-5 months, I think it's time to book to a certain extent.
Okay. By the way, check out Jet Airways. The ticker did alert us a couple of minutes back that that board meeting is over. Look at that, 5% up. That's what you're getting. There's a lot of hope floating in the air around fresh money coming in from the bankers. Let's see. We are yet to get any kind of official statement from the airline. Hopefully some of that should go through.